Under the Inflation Reduction Act, nearly any renewable energy project constructed by a local government is eligible for some kind of federal cash subsidy. And it's important to note that we know that local governments are not taxpayers and normally don't benefit from tax credits. And the Inflation Reduction Act includes a lot of tax credits, but the Inflation Reduction Act also authorizes a new mechanism called direct pay for tax credits for local governments to receive those tax credits in the form of a refund, essentially, for local governments to fund energy-related assets. Now, counties, townships, municipalities, and school districts can build long-term clean energy projects like solar fields, geothermal heating, clean fuel buses, or for vehicle fleets, all with federal support. And this isn't to mention that new local government buildings can be constructed more cheaply with Inflation Reduction Act authorized incentives, making tax credits available for an unlimited number of energy-related projects. So there's not a cap on the amount of funding that's available. There are credits that now local governments can apply for and receive, similar to how in the private sector, private property owners or private investors could only access these tax credits. Now, tax-exempt entities, including local governments, can access these benefits. And so honing in just a little bit more on that direct pay option in lieu of tax credits, which is a big game changer for these tax credits. These tax credits are the investment tax credit and the production tax credit historically are the primary incentive models that the federal government has advanced to encourage development of clean energy technologies. And so these clean energy incentives are now available for local governments. So with access to tax credits for clean energy projects via this direct payment option in lieu of the tax credits. This is for projects that are installed within the tax years starting after December 31st, 2022. So if projects are starting now and ending before January 1, 2033. So if construction ends before 2033. So that's 10 years that we have where we have certainty in these direct pay options for local governments. And you can claim, and as a local governments can claim that refund for the basically excess taxes they paid, making the applicable tax credits refundable. So essentially local governments are receiving a refund from the local government or from the federal government for installing clean energy assets. So the amount of the credit is paid to the local government when they make an election to receive that credit on a tax filing on that year, on the applicable year. So there are two ways that the direct payments can be used for local governments. First, for clean commercial vehicles, there is a new section 45W for our tax policy wonks out there. But section 45W provides a direct pay credit that is available for local governments up to 30% of the cost of qualified commercial clean vehicles placed in service before 2033. So again, 10 years out, 2033. There is a limit of $7,500 for vehicles with a gross weight of less than 14,000 pounds and $40,000 limit for vehicles at or above that 14,000 pound weight. Local governments can utilize the direct payment or direct pay tax credit when they purchase a qualifying commercial vehicle, place it into service and file their return, and then receive that payment of up to 30% for their purchase. For larger commercial vehicles that a municipality may purchase, like a fire engine, that larger direct pay tax credit applies to reduce the cost of those purchases to make a faster change from gas to electric vehicles. For renewable energy, that direct pay option applies to, again, the production tax credit and the investment tax credit, which are both the primary credits used to help finance renewable energy projects. So local governments with a municipal utility that finances clean energy projects, such as a solar array, can get up to 100% that with 100% tax exempt debt will be eligible for that direct pay option in lieu of tax credits. However, the IRA stipulates that if a project is financed 100% with tax exempt debt, the direct pay amount to the municipality will be reduced by 15%. So either way, there are tremendous amounts of opportunity for accessing those benefits and reducing the capital costs of these assets. So through that direct pay provision in the Inflation Reduction Act, local governments now have many incentives to invest in clean energy, and whether through the installation of clean energy systems on government-owned property or purchasing qualified commercial vehicles for government functions, this direct pay option in lieu of tax credits really holds a lot of potential.